Joining us this morning, Charles Schwab, Chief Investment Strategist Lizanne Sonders is with us. Lizanne, great to have you. So I guess what's going to deliver that? Can Powell help deliver that?
I'm not sure. The real question is whether he makes comments specific to the breakout in yields on the upside. It's sort of a tough needle he's trying to thread in terms of still probably finding frustration in his inability to convince markets that significant rate cuts are not happening next year. So that to me is probably first priority for Powell, but I'm not inside his head. So, but that's what I'd be looking for to see what his comments are with regard to the breakout on the upside in yields.
Right. It's been interesting. Last week, it was just last week, we were talking about the blowout in retail sales, consumer flush with real wages that were inflecting positive. And now it's about sort of global PMIs and maybe we're not looking at the growth trajectory we thought. Is that just part and parcel of the environment we're in?
Yeah, I mean, it's obviously been a very unique economic cycle, and there's so many cross currents on a day-to-day basis, whether it's dividing the economy into the goods versus services, trying to figure out the excess savings story and whether that's been a driver of strong consumer spending or whether it's more of the attachment to the labor market. You did see better than expected retail sales, but those are expressed in nominal terms. There's still enough inflation that in real terms, we actually really haven't made much movement in a metric like retail sales in the last couple of years. And then you've had some of the pretty concerning stories about shrinkage. And I think the sort of enthusiasm around that Atlanta GDP nowcast hitting 5.8, that started to be tempered by virtue of some additional data that's come in, to your point, PMIs, some of the data today, durable goods, showing that maybe the economy isn't quite as robust as we might have thought on that day that GDP now came out at 5.8.
And Harker also mentioning the impact of the student loan repayments, which will resume in October, not to mention a number of retailers, Liz, from Walmart to Macy's, among others, referencing how that could put more pressure on the U.S. consumer. How are you factoring that in?
So given the limited penalty associated with not paying student loans, we'll have to see how much kind of take up of the moratorium ending happens. But it is the case that we have started to see pressure on the consumer. If you break the excess savings, what's left of it into income cohorts on the lower end of the spectrum, much, if not all of that, and then some is exhausted, and that's why you're seeing this increased use in revolving credit. You are starting to see delinquencies kick in areas like auto loans, in addition to credit cards. Tends to be a bit more concentrated in subprime, but even up the income spectrum, what you're hearing from retailers, to the extent they want to provide the fine-tooth comb details, is that there is more of a focus on non-brand names. We've seen the pressure in terms of unit volume. So it's really important in this environment with any of the consumer data to look at both the nominal data, which is how it's typically reported, but also the real data, which is a bit more somber.